on the channel Algo Driven Lab, and in today's video we are gonna to go through another trading strategy, which is similar to simple moving average strategy we backtested. Like I backtested for you last time. You can check it on my channel. So the second video, and the first one is just basic one, the second one is just an extension of the first one, and in today's video we're going to backtest the third trading kind of let's say approach and strategy, where we consider not simple moving average but exponential moving average with the same windows, which is like 10 days fast one and 50 days a slow one. And the logic is pretty similar. We will go one by one, again just quickly go through the codes, and then we will gonna to compare how this strategy behave on different asset classes, and finally we will find out which one is winner, which actually market is not really worth considering the strategy. And I guess this will be helpful and interesting for those who are in trading and in the investing world. Okay, before I start, I just would like to ask you to subscribe to the channel, and please also leave on any comments you would like to wish to see backtesting of maybe your desired strategy later on. I'll be very glad. And any thoughts on this video in particular, so any comments are most welcome. Okay, so again, as usual format, as I mentioned last time, we are going to consider the 5 key asset classes to have a consistency over strategies, to make at some point of time to compare the strategies and to see which strategies works well, which strategies don't like can be or don't or shouldn't be considered. So again, we're gonna to use Apple stock, EURUSD Forex pair, gold, S&P 500 index, and crypto Bitcoin USD pair, right? Crypto pair. And so this is the starting point, and just I'll go through briefly the strategies, the code, and we'll execute one by one so that you'll see the hard numbers, and then we'll make a final comparison together. Okay, so first we'll install libraries. I'm not going to stop on one by one. Then second, we import all the necessary libraries here to work with our data. Third, we use here our tickers, our asset classes. Here we can see they are indicated with this sign in this comment. So the 5 tickers I mentioned, but this time we are gonna do it in alphabetical order to make things correct. And first we are going to consider Apple, then we are going to see Bitcoin USD pair, then EURUSD Forex pair, then gold, and then SPY. And just to mention the important factor, I'm using the most recent data here, as you can see, 8th of May 2026, and I backtested already, or we are going to backtest this the strategy for exactly 10 years, so 2016 May 8th of May, so that it will be comparable again, not more nor less to other strategies. Okay, so this is it, and then we're going to proceed with another our part, which is actually this loading of our indicators. Again, exponential moving average, it just modification of moving averages, and it smoothes our let's say price movements and makes them more kind of smooth. And we are using to make things simple 10 and 50. 10 is fast, 50 is slow, and it means days. And then we are gonna to go for the strategy itself. So here what we do simple is enough. We buy when exponential moving average of 10 crosses up exponential moving average of 50. We buy, you see the positive one, and when exponential moving average of 10 crosses down exponential moving average of 50, we sell. So you see the negative sign. So this is very simple, long and short strategy. Now next, we're going to define our closing prices, strategy returns, and equity curve calculation. So I'll not stop on technicalities, but here we fill, for example, not available data with 0 to make things full, and then we have an equity curve which shows us like cumulative equity curve, so that we'll see not at one point of time, but for the 10 years we accumulating our how our equity is accumulated, right? Okay, so we should go. So here we are gonna to, in this side of block of code, we are gonna to see the metrics function. Here we use again drawdown, Sharpe ratio, compounded annual growth rate, and win rate, as well as a profit factor, right? So these 5 key ones should be enough to say whether the strategy works for some assets or which assets actually worth considering for this strategy in particular, right? Okay, so here we just ask Google Colab to make things simpler. Actually, we can go even not for 4 digit, but to 2 digit, but let's keep it as is. And finally, we plot our equity curve here, as you can see. So we can plot any curve for our, like one of our 5 assets, right? Okay, so this is just brief overview and just kind of refresher what we did. And now I think the most interesting part, I'll just change a ticker name here over and over again, and then we'll go immediately to results. So because we need to save your time, and it will be very crucial to make things clear and concise. So, okay, let me run all the cells, and then we're gonna to consider what is going on with our analysis, right? Also for our backtesting. So all the cells should be run, okay, and now we are going to go and see what is going on here. So we'll jump over here immediately. As you can see, Sharpe ratio here is just 0.23. Maximum drawdown is just more than 50%, almost 60% of our initial capital, let's say, lost at one point of time. This is huge, actually. A compounded annual growth rate is just 2.5%, quite low. Win rate is below 50, and profit factor is 1, more or less around 1. So not bad, but not so good. And let's go and consider, okay, another asset. So we'll go, as I mentioned, in alphabetical order. Here, for example, we can take Bitcoin relative to United States dollar, and we should run all the cells to make things like work, right? Okay, so it should be now executed, and we should have results. Yes, so basically what we have here, for example, Sharpe ratio is now, as you can see, almost tripled. So now it's like 0.6640. Maximum drawdown is quite huge. Actually, now we lost more than 3/4 of our initial capital, almost 77%. Compounded annual growth rate is quite good. It gives us almost 24%. Win rate is just above 50% or 0.5, and the profit factor is 1.13. So this is much better, and just for for the sake of interest, we can go and see what is going on with our representation. So you can see that the most gain we got at the mid of 2022, and as a starting point of 2016, the lowest point where our equity started. So you see a lot of spikes here, a lot of ups and downs, high volatility. So for this strategy, it seems works well, yeah, given this high volatility, especially starting from close to 2021. Okay, so this is just brief overview. I mean, I'll stop on graphical representation on the only meaningful one because we don't need to stop on every asset class. And let's go and proceed. If there is some interesting findings, we will stop. Okay, and now let's go to Euro USD, our forex pair. Now let's run all the cells as a starting point, and we should see the results a bit below. Yes, let's wait. Yes, now it should be done and complete. Okay, so Sharpe ratio is 0.25, a bit far away from threshold of 1, not really quite good in terms of risk reward ratio. Maximum drawdown is around 19%, not really much, but not so good for giving this let's say Sharpe ratio. Compounded annual growth rate is just 1.5%, which is quite low. Win rate is below 50, 0.5. Profit factor is just around 1. So yeah, not so interesting as in terms of returns. So let's proceed and let's compare. Next hour is asset class is a commodity, and here what we'll do, we'll analyze how the strategy behaved for gold, which is like one of the representation of commodities, right? And I think this is a good representation, not considering oil, because oil is quite volatile and the other commodities as well. So let's keep gold, and we should go and see what is going on with our analysis. Okay, Sharpe ratio now is 0.40. Now it's a bit improved, but still in terms of risk reward ratio, it's not quite impressive. Maximum equity drawdown is like 26%. I mean, significant part we won, let's say 1/4 of our initial capital is gone at one point of time, more than a bit. Compounded annual growth rate is just 5%, more or less, not so impressive. Win rate is just above 0.5, 51 or 0.5131. Profit factor is around 1. Okay, so more or less interesting in terms of relative to a forex pair, but not so impressive as crypto, as you saw already, right? Okay, and finally, let's finalize our analysis with S&P 500 index, and here the ticker name is SPY, and then we'll see and I can conclude who is the winner for this strategy, which asset class behaves well if we use this strategy, and why it behaves. So we should also complete our analysis with some narratives behind. Okay, so finally for S&P 500 is just Sharpe ratio 0.3, not so impressive again. Maximum equity drawdown is 1/4 of our initial capital, 25% of loss. Compounded annual growth rate is around 3.8%, not impressive. Win rate actually is just 0.52. Profit factor is around 1, so 1.0615. I mean, as a conclusion, so far what we have, we analyzed again 5 asset classes. Okay, and again, similar to previous analysis of simple moving average, we can conclude that this strategy behaves well for crypto pair. So in particular, for example, Bitcoin USD showed us very good Sharpe ratio among all the 5, and compounded annual growth rate as well as profit factor. So again, the winner, if someone of you and let's say of trader wants to use the strategy for some assets, so it's better to use this strategy for crypto pair. especially for Bitcoin USD because of high volatility. This strategy captures well all the ups and downs. Okay, and this is the first insight. The second insight, in terms of maximum drawdown, if we would like to have minimize our losses at one period of time, we should use Forex pair, which is EURUSD pair. Of course, it's just one of the pairs. So of course, other Forex pairs will behave differently, but here the least maximum drawdown can be achieved if we use this asset with this exponential moving average of 10 and 50 crossover strategy. And in terms of win rate, which is interesting, with a little bit of advantage here, S&P 500 index is better off than other four assets, but again the difference is not so quite large. Okay, so overall the first place, if we can say that, is crypto pair, Bitcoin USD. In terms of maximum drawdown and win rate, either should be used Forex and index S&P 500. Unfortunately, this strategy doesn't really work, or didn't really work well for stock market, which is Apple stock, let's say in our case, and for commodity, which is gold. It seems that these two asset classes are not so volatile, and given that this strategy follows this, because of the trend following strategy, as the strategy follows the prices, the more volatile, the better it is for giving the returns. Okay, so this is it, and I hope you enjoyed this video. If so, please put thumbs up at the end, and please leave any comments related to this strategy. Also, please don't forget to click on notification bell to stay tuned on the next set of backtesting, and we are going to consider another different strategies using both trend following oscillators, or let's say momentum indicators, volume. There are a bunch of them. So here we are for long, right? And I'd like to hear from you. Maybe you'd like to see some particular or different backtesting of different or specific, let's say, financial assets, and if so, please leave comments. Okay, and let's stay tuned and see you in the next backtesting video. Meanwhile, wish you profitable trading and good investment decisions using algo-driven lab results and findings. Bye bye.